Hi, this is Scott Shellady for NakedTrader.com. Wednesday, the 21st of March, all day. I tell you what, you wanted to be long beans today, obviously. They were the ones that finished up on the day, probably 10 to 12 cents. Wheat and corn both took it in the shorts to about 5 or 6 cents. And you know what it really is starting to tell me is that we had some technical selling in both wheat and corn today, and corn settled at a kind of a vulnerable technical level. So if you're a bull, I would say that this corn backing off like this is probably a lot healthier for a longer-term rally than not, because we did get to some heady highs where that oxygen kind of ran out. And I think that if you want to see something that could be a shocker come the end of the month, which you could tell by our volumes is what most people are waiting for, that's going to be the thing that really gets us going. And I'd like to see us rally from a lot lower level to the heady heights of 7, 710, 720. And the reason why that area is kind of vulnerable is that there's been a ton of speculation on a bullish move in there, and a lot of institutional papers come in and bought the $7 calls in multiple months or some upside calls. And so as we rally, those locals that have sold those calls to the institutions get shorter and shorter volatility, and then it starts to become a feeding frenzy, and it's a self-fulfilling prophecy. So that's the danger. The danger areas between 675 and 725 on that rally. We got to the low end of that this time around. But, the good weather kind of put a damper on things, and now we had some technical selling that kind of really added to the pain. So other than that, another thing we're looking at over in that other room is, we have to see what the value of the dollar is and what's going on in that 10-year. And the 10-year has been really interesting, and to see what that's doing to our stock market. We haven't seen wholesale buying into the stock market that we would have thought we would have seen with the move in the 10-year, that 40, 50 bips from 6 or 7 business days ago. The 200-point rally we got in the Dow was, generally speaking, attributed to the fact that those bank stress tests came out halfway decent. After the stress tests were out, the 10-year sold off. We didn't see the cash that came out of the 10-year plow into the Dow. So that's telling me that that market might be running out of steam or some oxygen as well. And on top of it, we have inexplicably got the VIX around a 15% level, which is showing that the institutional investors have no fear, and the complacency is at a very high level. So those are the things we're looking at. Technical selling today in corn. We kind of settled on a weak note, so keep an eye on that overnight. I'm Scott Shellady for NakedTrader.com.